Welcome back to the Catalyst Clock. Quick note, not financial advice, we're not licensed advisors, this is educational analysis only. Microsoft was the worst performing stock in the entire Magnificent Seven this year, down as much as 29% from its all-time high. So was the sell-off wrong the whole time? Let's find out. Microsoft posted $4.74 in earnings per share against an expected $4.33. That's not a small beat, that's blowing past the number by 41 cents.
And Azure's growth is the real headline, 43% in a quarter, crossing $100 billion in annual revenue for the first time. On top of that, there's a $678 billion backlog sitting on the books, contracts already signed, revenue not even counted yet.
For a company this size, that's not a rounding error, that's basically an entire second company's worth of future revenue already locked in.
Now here's the tension that had the stock down all year in the first place. Microsoft spending close to $190 billion this year just on AI infrastructure.
And bears have been asking one simple question the whole time, is that spending actually turning into revenue, or is it just a very expensive bet on a future that hasn't arrived yet? This earnings report is the first real evidence that it's working.
Even after the recent bounce, the stock's still trading well below where analysts think it should be. The average price target sits north of $555, versus a stock that spent most of this year in the $350s and $380s.
So, worst Mag 7 performer, then a blowout quarter that proved the spending is converting into growth.
I'd call this an 8 out of 10. This wasn't a lucky quarter. Azure's growth rate actually accelerating while spending this much is exactly the signal bulls needed. The risk that's still real is whether that pace holds up next quarter, or whether this print was the easy comparison.
Watch the next earnings call for one thing specifically, whether management talks about CapEx slowing down or staying elevated. That answer tells you if this rally has legs.
It's a strange thing to watch the most valuable comeback story in tech happen to a company most people assumed was too big to have a comeback story left in it.
Subscribe for the next earnings breakdown.